What's going on, everyone? In today's video, we're going to be looking at some scalping secrets and strategies that changed my trading for the better, and hopefully they can help you guys out as well. For those who are unfamiliar with scalping, it's basically a trade that lasts anywhere from a few seconds to a few minutes. A day trade can be any time hold during the intraday period, but a scalp is typically never held more than 5 to 10 minutes. So with that said, let's get right into the video. Now, the first secret to scalping is identifying your key levels. Now, if you're unfamiliar with key levels, they can be anything such as a simple pivot point, support and resistance, or a supply and demand level. You are going to be using these key levels on smaller time frames and mainly as you are looking for smaller trades. And on a larger time frame, there's more room for error, so I would say stick to anything 30-minute and below for these. However, I do believe you should still mark down higher time frame levels to have them for extra confirmation on your trade. So once you have your key levels marked down, this is how you will look to trade as a scalper. As we can see right here, this is a much smaller part of a much larger move. So for example, right here, I would enter off this demand level and take a quick trade to the nearest resistance, which is right here. However, you may swing to a little bit higher level, but if you are a true scalper, you are only looking for small moves and not swinging as high as that. Now, if you're not using supply and demand and you're using breakout levels, here's an example that you could use right here, where you could take it off the break of this prior resistance level for a small 10 to 20% scalp. Again, right here, you are not looking for anything more than that small 10 to 20% as you are a scalper and you are not looking for the entire move like a day trader or a swing trader would be. So overall, mark down key levels according to your strategy and take small, less time consuming trades on those. So now we're off to the second secret for scalping. So this second rule is something that most traders in general, whether you're a day trader or swing trader or long term in general, they make this mistake a lot, which can cost them lots of money. So the same rule applies to someone who is scalping. On scalping moves, they're much more violent and fast, so you need to have your trade plan set out before you even enter. So basically, you need to know where you will exit for both your stop loss and your profit target before you even buy the stock to be ready to go right as it's happening. So let's say you took a trade off this rejection right here, you would need to have your exit planned right at this low and your stop loss placed above the high and execute as either one comes there. So you can see when this trade hits my target at the previous low, I must execute right as it's happening because I can't sit around and wait for the stock to, maybe go more or anything like that. I am just focused on my target hitting on either side and exiting as fast as I possibly can. So if you see on this next candle, we see that the green candle obliterates that level right after it breaks, and you're back in the red because you did not execute on time. So given the fast and volatile nature of scalping, you must look to be exiting without second guessing or looking back at all. So to recap number 2, you must have your plan set and execute as it happens without thinking twice about it. Now, secret number 3 is probably one of the most important, especially if you are a breakout or breakdown trader. So due to the fact that we are playing much smaller moves, you will also experience a lot of fake outs on trades with scalping. So the best way to counter this is to use something called volume, which you can see at the bottom of my screen right there. So on this candle right here, we can see that we get a breakout with a big green candle. However, there is not enough volume to back it, and we do see the next candle right after has a massive selling candle. So what happens after that is we get a pretty nice downtrend after that rejection, and we don't get a nice clean breakout, and this is what we call a fake out. Now when we look over here, we can see this candle got a pretty clean breakout with a great volume candle right here at the bottom, which is totally opposite from what we saw on the last candle, and that means we got great follow through right here. Now also to note one more thing, you can see this candle right here is much smaller than the other candle, but the volume makes up for it, and we can see that we get a much cleaner follow through with no fake out. So overall, you need to make sure that your trade has the volume to go along with it and not just your actual candles or anything like that. You must make sure the volume is there to avoid being faked out. So now let's move on to secret number 4 for scalping. So secret number 4 for scalping is going to be identifying trends and making trades on those pullbacks. Now I will first show you an indicator based strategy that I use for finding these pullbacks, but if you are someone that trades off of key levels like me personally, you may use examples like we did in secret number 2. So the indicator that you want to use for pullbacks is going to be called the VWAP, which is VWAP, and you can find it on any broker and trading view or any website that you use to chart. So the VWAP is just going to be a thin little line like this. It might come with 1, 2, or 3 lines, and you can remove the top and the bottom ones and just leave the middle one for using pullbacks. Now, how do you use the VWAP to your advantage on pullback trades? So I typically love to play the VWAP after the first hour of open, and this is going to be usually on penny stocks or options. They both work well. So here we see after a pretty nice run, we get our first pullback to the VWAP, and it doesn't come exactly to the VWAP, which is perfectly okay. I like to give about a 50 cent range on things like SPY and about a few cent range on things like penny stocks to enter on the trade. So once again, massive move up early in the morning, we get the little bit of cooling down, comes to view up, and then we start bouncing from there. We tested one time, ate a higher low, and we're continuing the trend higher. So it isn't until midday that we get an exact perfect test of the VWAP level right here, and you can see how perfect this lines up with the actual trade itself. We get that test of the VWAP right there, bounces perfectly off it. We get a nice move. If you're a scalper, you would probably be out on the first move. If you're a day trader or swing trader, you may add on more when it comes to the VWAP level a second time. So with the VWAP, you're going to get multiple opportunities to enter, whether you're waiting for an exact touch of the VWAP level, or you are entering as close as possible to it and averaging into your position. But as a scalper, I would personally say to look for the smaller moves. So right here, as we saw, we get the VWAP test, we get the bounce a little bit up to the previous highs, and I would look to already exit around there for a nice gain. I'm not concerned with the most that I can get out of it or anything more than that. I am just looking simply for small 10 to 20% scalps. So finally, let's move on to our last and final secret number 5. Now, as a scalper, knowing how to use your levels is probably the most important thing you can do. So this next example I'm going to show you is a little bit of a longer trade, so this would fit more into a day trader's category, but scalpers can use this as well. You don't need to necessarily stick to that exact 5-minute to 10-minute trade period. So as you can see, I've just made a really quick rough sketch of some levels here. We can see I have my support level for the previous low, and then the low before that, and then our most recent high. So as a scalper, this is what my trade will look like. You enter off the most recent test on that pullback, stop loss is below the previous low, and your target is that recent high. Now, you want to understand this. As a scalper, your frequency of taking trades is probably going to be much higher, so you need to make sure that your risk to reward is as great as possible. So for example, here we have one of a 5.82 risk to reward ratio, which is beautiful as a scalper. So let's say if you do lose on this trade, you are going to get another setup that you can take, but since you are only risking about 0.26% to a 1.51% reward, as a scalper, you can take about 5 of these trades and still get profit on them, even if you lose the first 4. So that is maybe the biggest mistake that I see traders make, is allowing themselves to go a bit more in the red and give themselves more room. And as a scalper, you can't be doing that. As a swing trader, you could, because you are looking for a longer time frame swing trade, or as a day trader, you could. But as a scalper, you are looking for a small move in and out, and you're not going to be able to just keep averaging down or holding past a certain level. So this is going to be your ideal setup, and anything with a risk to reward ratio above 1 or 2 is going to be good. Ideally, the more it is, the better. But as you can see in this situation, we do hit close to that level. Personally, I like to scale out a little bit halfway. So I would have scaled out around here, and I would have gotten about a 3.82 or a 3.94 risk to reward ratio, which is still amazing. So you as a scalper need to have tight stop losses and tighter targets, and you need to make sure that you are not allowing trades to run, a little bit below your stop loss, and then it runs more and more and average down. Because day traders could do that if they are giving themselves more room. Swing traders could do that. Investors could do that. Scalpers cannot. Thank you guys for watching. If you guys liked the video, make sure to like, subscribe, and comment, and let me know what you guys want to see next.